Hi, this is Shelley Kraft. We're coming to you live on SNN Live. We're at the 2011 New Orleans Investment Conference here in lovely downtown NOLA. I'm here with Rick Rule of Sprott USA. And ladies and gentlemen, it's always good to have one of the featured speakers at the conference on. Let's find out what he talked about. Ladies and gentlemen, Rick Rule. How are you, Rick?
Fine, Shelley. Pleasure to be here, by the way.
And welcome back to SNN Live.
Thank you.
Now, your room, standing room only, that's a common occurrence. What did today's audience hear from you?
I think the direction in microcap resource equity prices is lower. I think the hallmark of the markets in the next 18 months is going to be volatility. I think that volatility is absolutely going to terrify people, and I think it's going to set up an absolutely spectacular opportunity, in particular for private placement investing in the sector. My long-term, by long-term I mean 3, 5, and 10-year outlook for the sector is very bullish, but I think we have an extremely difficult patch to get through. And as a consequence of the fact that many of the junior resource companies didn't finance this year in hopes of better markets, but also didn't stop spending, the opportunities that will be available for speculators to participate, particularly in equity private placements, when the more promising exploration companies run out of money and can't continue to fund their development efforts, will be very good in the first 2 quarters of next year.
Question. Does that ring true for exploration, development, and production companies, or is it any one of those is more than another?
The producing companies will have less need to finance because the companies that have got into production at prices above $1,500 gold are generally generating enough free cash that they can service their debt and grow. On the exploration side of the business, we see opportunities, but we are particularly seeing a dichotomy in the market now where companies that have completed a preliminary economic assessment but don't have a feasibility study are in a deep discount. There is an arbitrage in the market that we see between preliminary economic assessment and feasibility study that's the deepest discount, the deepest dichotomy that I've seen in 30 years.
You must have started out at 10 years old, right? Here's another question. Does the fact that you're speaking to an investor base that is hearing you say that a private placement is a good investment opportunity have an effect on the buying public purchasing outstanding shares of an existing publicly traded company?
Well, I would certainly hope not. If it did, I would be acting in my own worst interest, in the sense that I'm looking to deploy capital. It isn't in my interest to have the general public be buying these stocks right now because I'm trying to buy them lower. I would also point out to your listeners something which should appear obvious, but I'll make it obvious. Something isn't a good investment because it's a private placement. It has to be intelligently structured, as an example, with a nice, long, full warrant. And of course it has to be equity issued by an issuer that's truly promising. There are probably 3,000 of these microcap resource companies, as you know, and probably 2,500 of them are completely valueless. The value is concentrated in probably 20% of the population. But focusing on 20% of the population in the next 9 months on the private placement side of the business, in intelligently structured private placements, will offer us certainly the best opportunities that we've seen since 2008, and the best opportunities that we've seen before that since 2003.
Question. The 20%. Let's focus for a second on the 20%. What are the 3 things that you think an investor should think about when looking into, after they've eliminated 80% and now they focus on their 20%, what are 3 things that they should signify as to why they would invest in that company's shares?
Top of the box is management track record. Management has to have been successful in the past, and it's important that they have been successful in a task that is almost precisely the same task that they've set out to accomplish this time. The fact that somebody was successful, as an example, in operating a gold mine in Quebec does not mean that they're going to be successful trying to find a copper mine in Peru. Different culture, different task. The people have to have been successful, and they have to have been successful at a task which would demonstrate that they are suited to the task at hand. The second thing thing is scale. Too many people set out to find small mines. The risk is that you'll succeed. Everything that can go wrong with a big mine can go wrong with a small mine, but a small mine can never make you big money. So you need people and you need scale. And actually there's 4 things, so I have to stretch your question. The third is data. There has to be sufficient data available to you as an investor so that you can analyze whether or not the story that the management told you has some probability of being true. Exploration is a matter of answering unanswered questions, so the question has to be framed correctly, and you tell that by the data. And the 4th thing is resources. If it's going to take the company $15 million to complete a feasibility study, and they have $6 million in the treasury, one must wonder what half a feasibility study is worth. The answer is, of course, nothing. So we have to have management. It's critical to have the appropriate management team. I guess that's what I'm trying to say. And you have to have scale.
Here. You know what I'm hearing? That it's difficult to find good management. And it's very difficult to find the right engineer and geo. That's what I'm hearing throughout the conference. And, a lot of the companies that I interview are proud of who they have because of their track records, and they come out of Placer, they have, they're out there, they're good guys. You know what I mean?
Absolutely. We had, as you well know, a 20-year bear market in resources. And a 20-year bear market in resources didn't just wear out ore bodies. It meant that a whole generation of managers, my generation sadly, are largely retired. And the set of people that came in behind us didn't come into the resource business because there was no jobs. There was a 20-year or 25-year gap. And so we face a absolutely critical skills shortage. We don't necessarily face a resource shortage. In the copper business, as an example, there are probably 65 nice-looking feasibility or pre-feasibility stage projects, but there are not 65 management teams that have the skill sets available to put them in production.
So that could be a great horse and a not such a good jockey, which is not my bet.
Right. A recipe for failure.
That's correct. Okay, so short term? What are we looking at? Short term.
Short term, low and choppy. The volatility that we've seen in the last 6 weeks is a down payment. We will see the VIX above 30 for an extended period of time. The volatility that we're going to see is going to be absolutely terrifying. For people that have courage, couldn't get better than this.
So it's a trader's market.
Correct.
Ladies and gentlemen, the one and only Rick Rule. Let me have your website.
www.gril.net or www.sprottglobal.com.
Rick Rule, Sprott USA. Give my regards to Eric. Good to see you. Thanks for coming.
Thanks for the opportunity.
You got it.